I'm ready.
Okay. All right, it's live now?
Yes, should be.
Okay. All right, perfect. All right, so welcome to this special board meeting. Last board meeting, even special for calendar year 2024. Everyone has been presented with the agenda. So can I get a motion to? So welcome to this special board meeting. Oh boy, there I am. Last board meeting, even special for calendar year 2024. Everyone has been presented with the agenda. So can I get a motion to? Oh, welcome. All right, is that off now?
Yeah, sorry, it
Okay,
was,
that's okay. I
need
just
to
had to hear my own voice for too
need to
long.
turn off the thing.
All right, so can I get a motion to approve the agenda for today's meeting?
So moved.
All right, Lauren, can I get a second?
A second.
Any discussion? All in favor?
Aye.
Aye.
I'm trying.
Aye.
Any opposed? Okay, motion carries. All right, first agenda item is the audit. I'll turn it over to you, Stephen.
All right. Can everyone see the slides and the audit on screen? Is that coming through okay?
Yeah.
Yes.
Yes.
Excellent. Thank you. Okay. So first item I want to talk about is the management letter. We'll talk about the findings that are included in that letter as well as the management comment. Then we'll talk about the financial results, which include the auditor's opinions and then highlights of the financial statements. And then to wrap up, fund balance and the reserve ratio. And so first thing I want to talk about is the management letter. So it's included in the reports that were sent out. And so there will be a little bit of reading today, so bear with me, please. There's a lot to unpack here. Our auditors have audited the modified cash basis consolidated financial statements of the school for last year, June 30th, 2024, and they issue a report dated December 27th. And so their professional standards require them to provide you, the board, with certain information. And it's their responsibility under the generally accepted auditing standards to do such. And they'll also provide certain information related to the planned scope and timing of their audit. And they've communicated such information in our letter, our engagement letter back in July. And so also the professional standards require that they communicate to you the following information. And that includes the significant audit matters, any difficulties encountered, corrected and uncorrected misstatements, disagreements with management, management representations, management consultations with other independent accountants, other audit findings or issues, other matters, and then restriction on use. So going back to the significant audit matters, just highlighting some of the information here. They noted no transactions entered into the school during the year for which there's a lack of authoritative guidance or consensus. All significant transactions have been recognized in the consolidated financial statements in the proper period. There's also typically some accounting estimates that are integral to the consolidated financial statements. And so certain accounting estimates are particularly sensitive because of their significance to the consolidated financial statements and because of the possibility that future events affecting them may differ significantly from those expected.
One second, Stephen.
Yes.
Guys, can you see the screen? I'm having a problem with my Zoom here. Can you guys see everything?
I see it.
Yep.
Okay. Okay, that's fine. Then I might have a problem with the presentation. I'm going to try to work it out. Continue.
And so due to the school applying the modified cash basis of accounting, there's no estimates that are made during the preparation of the consolidated financial statements that other entities you might see have estimates with. there's no particular difficulties encountered. They also talk about corrected or uncorrected misstatements. And so highlighted there at the bottom, there was none, there was no misstatements detected as a result of the audit procedures, and any corrected by management were and corrected by management were material. Let's see. Let me get my words here. In addition, none of the misstatements detected as a result of audit procedures and corrected by management were material, either individually or in the aggregate, to each opinion unit's financial statement taken as a whole. Going further down, disagreements with management. They're pleased that they're pleased to report that there was no such disagreements that arose during the course of the audit. Management representations. So during the audit, there's also these management representations that management has to provide. And so the representations include the organization's responsibility for preparing and fairly presenting financial statements. We also acknowledge our responsibility for internal controls, fraud prevention, and maintaining documentation, and also taking any corrective actions when necessary. Management consultations with other independent accountants. We didn't have any other audit findings or issues. They generally discuss a variety of matters, including the application of accounting principles and auditing standards with management each year prior to retention of the school's auditors. These discussions occurred in the normal course of their professional relationship, and their responses were not a condition of their retention. Other matters. So this is where we get into some of the findings here. So with respect to the supplementary information, the supplementary information accompanying the financial statements, they made certain inquiries of management and evaluated the form, content, and methods of preparing the information to determine that the information complies with the modified cash basis of accounting. The method of preparing it has not changed from the prior period, and the information is appropriate and complete in relation to their audit of the consolidated financial statements. They compared and reconciled the supplementary information to the underlying accounting records used to prepare the consolidated financial statements or to the consolidated financial statements themselves. Something that they noted. So they noted in the current year, there's two things here. So first one's a finding, and the second one's a management comment. So during the year, the school had errors in determination of eligibility of students to receive free or reduced priced meals. And this is due to the lack of effective internal controls and caused an overclaim of eligible meals. And so they indicate to see the finding, and that's number 2024-001 in the schedule of findings and question costs, and that can be found in the audited financial statements. Let me flip over there. So within the audit, I have these bookmarks on the side there. That was in the shared folder. And so if you bring up the bookmarks, just flipping to page 34 of the findings. And so this relates to the child nutrition cluster. We also refer to this sometimes as food service. And so the criteria, so with the uniform guidance, it requires that non-federal entities receiving federal funds establish and maintain internal control over the federal awards that provides reasonable assurance that the non-federal entity, the school, is managing the federal awards in compliance with federal statutes, regulations, and the terms and conditions of the federal awards. So the condition there were errors in determination of eligibility of students to receive free and reduced meals. And the cause. So during the year, there was no second review of the determination of students' eligibility to receive those free or reduced price meals. So due to the lack of effective internal control, errors were noted, causing the school to overclaim those eligible meals by just over $20,000. And so their recommendation is that the school evaluate key processes, identify risks in the child nutrition cluster, and implement internal controls to respond to those identified risks. And the school agrees with the finding and to implement the auditor's recommendation. I also want to draw your attention in the audit report to page 28. And this is the independent auditor's report on compliance for each major program. And so typically you'll have an unqualified opinion with respect to major programs. In this case, there's a qualified opinion. And so the auditors have audited the school with respect to compliance with the types of compliance requirements as identified as subject to audit in the OMB compliance supplement that could have a direct and material effect on each of the school's major federal programs for the year ended June 30th, 2024. The school's major federal programs are identified in the summary of auditor's results section of the accompanying schedule of findings and question costs. And so there's this qualified opinion on the child nutrition cluster. And so in their opinion, except for the non-compliance described in the basis for qualified and unmodified opinions section of their report, the school complied in all material respects with the compliance requirements referred to above that could have a direct and material effect on child nutrition cluster for the year ended. And so, let me scroll down a little bit more here. So the matter giving rise to the qualified opinion. So this matter, as described in the accompanying schedule of findings and question costs, the school did not comply with requirements regarding the child nutrition cluster, as described in finding number 2024-001 for eligibility. Compliance with such requirements is necessary, in their opinion, for the school to comply with the requirements applicable to that program. Management is responsible for compliance. The auditors do have certain responsibilities, and it's to obtain reasonable assurance about whether material noncompliance with the compliance requirements referred to above occurred, whether due to fraud or error, and to express an opinion on the school's compliance based on their audit. And so report on the internal control over compliance. Their consideration of internal control over compliance was for the limited purpose described in the auditor's responsibilities for the audit of compliance section above, and was not designed to identify all deficiencies in internal control over compliance. However, they did identify certain deficiencies in internal control over compliance that they consider to be a material weakness. A deficiency in internal control over compliance exists when the design or operation of a control over compliance does not allow management or employees in the normal course of performing their assigned functions to prevent or to detect or correct compliance with a type of compliance requirement of a federal program on a timely basis. A material weakness in internal control over compliance is a deficiency or a combination of deficiencies in internal control over compliance, such that there is a reasonable possibility that the material non-compliance with a type of compliance requirement of a federal program will not be prevented or detected and corrected on a timely basis. And so they consider the deficiencies in internal control over compliance described in the accompanying schedule of findings and question costs as item number 2024-001 to be a material weakness. So we have a material weakness in internal control over compliance related back to this eligibility. And go back over here for a moment.
And Stephen,
And
just
so-
to, oh, sorry, go ahead.
Let me just say two more things and
Yeah,
then
sorry.
I'll open it up here. So there is a corrective action plan. I'll get to that in just a moment, but just want to remind you why we have this going on. So back in April, Dana told the board that we had some issues with food service. And so this finding and the management comment relate back to last year's food service matter with AP Software Services, Inc.
Mhm.
And so ANAFAM failed to complete an essential task associated with managing the school's free and reduced lunch program, specifically failing to follow up and verifying applicant families' income who applied for free and reduced lunch. And so due to those failures, it's resulted in fraudulent food service claims to Department of Elementary and Secondary Education. So the second thing here, so that's the finding. The second thing here is a management comment, and that's that annually the school is required to complete a national school lunch breakfast verification process to essentially test a select number of applications, and that was not done timely. And so there's a management comment there that we need to make sure that that's done, and that has been done for this school year. Michelle, did you have a question there?
No, my question was just to confirm, this was the vendor issue that we had talked about earlier in the year. So you did say that, so.
One other thing I wanted to highlight here is the corrective action. So we do have a plan in place to fix this. So the planned corrective action is to revise and strengthen our processes. We have a new software we're using, PowerSchool, that should help us and help reinforce and strengthen this process. Secondly, letter B there is to establish and strengthen internal controls. So we're reviewing eligibility, and then we're doing regular edit checks. We're implementing weekly edit checks with the point of service to confirm the correct benefit distribution. Staffing and training. So we fired the contractor back in June, so that's been done. But we're also looking at regularly training our food and nutrition services and conduct quarterly training sessions on eligibility, compliance requirements, and internal control processes, and hands-on training for the new software and reviewing attachment A, which is the eligibility criteria for free and reduced priced meals. Letter D, monitoring and evaluation. So there's an audit schedule to conduct monthly internal audits to evaluate compliance and report findings to leadership. Performance metrics to track errors related to the eligibility determinations and aim for a significant reduction by the end of this school year, June 30th, 2025. And lastly, letter E, addressing question costs. So the just over $20,000 that's owed back to the state. The state's planning to just withhold that on a future food service claim, but we want to reconcile that and make sure that they get their money back.
Okay.
I have a question, Stephen. How did we discover there was an issue? I don't remember. How did it come to Dana's attention?
So we alerted Dana immediately once we found out, and where that came to light was last year during a DESE food service review of the entire food service program. We found where she was not following through on the verifications, which then obviously affected eligibility of the students and families.
Okay, and so what in order to address these, because essentially it was triggered by a third party, by DESE. So in order to prevent that, that's the monthly audit that you're planning on doing.
Correct.
Okay. And the monthly audit is going to be a random check of you're going to pick a small number and kind of what we've been doing last year, right?
That's correct. Yep. And there's the second review, just making sure things with the eligibility review under letter B, Deanne and Rick are using the software to make sure the eligibility is correct.
Okay.
Any other questions?
Are there other programs that could present this kind of risk beside this free and reduced lunch?
We're not aware of any.
So all the other program will get federal money. You know, it's like what kind of programs are we getting federal money from?
So, like one of the other major programs that were selected during the audit was the ESSER funds, and no, those were not. Those were in compliance. And let me flip over to the audit report.
So
So
they
if
were
we-
tested by the auditors.
Correct. Yes.
Right.
And so if we go back here to page 28, so there's qualified and unmodified opinions. And so we talked about the qualified opinion, but then they also issue an unmodified opinion on each of the other major federal programs that we have. And so in their opinion, the school complied in all material respects with the compliance requirements referred to in the above that could have a direct and material effect on each of its other major federal programs identified in the summary of auditors' results section of the accompanying schedule of findings and questions for last year.
Is it something they do routinely, like testing all these programs, or is it something they did this year because it was triggered by the free and reduced lunch issue?
It's routine. So if we spend over $750,000 in federal cost, then they perform this CIFA or schedule and testing.
So if we hadn't found out the issue related to free and reduced lunch, it would have been identified through the audit, likely.
Yes, there's testing
Right.
done on applications and verifications.
So at least we got ahead of that, so that was a positive.
Just to add in, that threshold is moving up to $1 million next year.
Thank you. Any other questions? Okay.
No.
Now flipping back to just the main audit. Um, so I'm talk through the independent auditors report. So they report on the financial statements. And so they have audited our consolidated modified cash basis financial statements for the school. And those comprise the statement of assets, liabilities, net assets on the modified cash basis for last year, June 30th, 2024, and the related consolidated statements of support, revenues, expenses, and changes in net assets and functional expenses, also on the modified cash basis. And so, in their opinion, the accompanying consolidated financial statements referred to above present fairly in all material respects the assets, liabilities, and net assets of the school for June 30th, 2024, and its support, revenues, and expenses for the year then ended in accordance with the modified cash basis of accounting described in Note B. And so they draw our attention to Note B of the consolidated financial statements, which describes the basis of accounting. And so they are prepared on the modified cash basis of accounting. And that basis of accounting is other than accounting principles generally accepted in the United States of America. However, the opinion is not modified with respect to that matter. And so the financial statements are presented fairly, in other words. Responsibilities of management. So there's certain responsibilities that management have, and it's outlined in the section here. Management is responsible for the preparation and fair presentation of these consolidated financial statements. Management is also responsible for the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation, free from material misstatement, whether due to fraud or error. Then the auditors also have responsibilities. So they have responsibility to obtain reasonable assurance about whether the consolidated financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes their opinion. This reasonable assurance is a high level of assurance, but is not absolute assurance, and therefore is not a guarantee to detect a mere material misstatement when it exists. Misstatements are considered material if there is a substantial likelihood they would influence the judgment made by a reasonable user. And so in performing their audit, they exercise professional judgment, they identify and assess risks, they obtain an understanding of internal control, evaluate the appropriateness of accounting policies, and then conclude. And they conclude whether, in their judgment, there are conditions or events considered in the aggregate that would raise substantial doubt about the school's ability to continue as a going concern for a reasonable period of time. Supplementary information. So included with the audit is also supplementary information. So during their audit is conducted for the purpose of forming an opinion on the consolidated financial statements as a whole. And this audit's conducted for that purpose of forming the opinion. But in addition, there's these additional financial statements that are listed out here, not highlighted there. And they're presented there for the purpose of additional analysis and are not required. They're not a required part of the consolidated financial statements. This information is the responsibility of management, and it was derived from and relates directly to the underlying accounting and other records used to prepare the consolidated financial statements. And so, in their opinion, the supplementary information is fairly stated in all material respects in relation to the consolidated financial statements as a whole on the basis of accounting described in Note B. And so that Note B I wanted to just reference really quickly here. So we already talked about how that basis of accounting is not generally accepted in the United States of America, but their opinion is not modified because we're using the modified cash basis of accounting. And that basis recognizes those assets, liabilities, net assets, revenues, and expenses when they result from cash transactions, with a provision for recording investments, long-term receivables, capital assets, depreciation, payroll liabilities, or payroll withholdings, excuse me, and long-term liabilities such as capital leases. Jumping back to, in their opinion, that the financial statements referred to above are presented fairly. So it talks about how those assets, liabilities, and net assets are presented fairly. And so if I show you the assets, liabilities, and net assets, they're indicating in their opinion that those are presented fairly. Same with the supports and revenues and the expenses. And so when we're looking at these supports and revenues, excluding capital items and principal payments, AL, the school received more than we spent by 1.5 million, almost $1.6 million. And so if we compare those financial statements to the financial statements that we looked at back in August for June 30th, the major difference is the consolidation of the school with our real estate entity. And so if you look at Note A on page 7, it talks about the principles of consolidation. And then also if we look at pages 12 and 13, it talks about the new markets tax credit that we entered into back in 2018. And that's also part of why we have this real estate entity. Also, a difference, as we've noted in prior years, is that we have depreciable items that we capitalize. And so because we capitalize them, they don't land on this support and revenues and expenses page. It's actually on like a balance sheet or in the assets and liabilities section. On page 16, included in the report, there's an increase noted here. If we look at the revenues of 21.5 less the expenses of 19.8, we had an increase in unrestricted net assets of $1.7 million. Essentially an increase or surplus when we exclude those capital expenses and debt principal payments. Looking at what DESI looks at, that's on page 18. So this reports an increase in our fund balance of $1.1 million, a surplus. And so this statement reconciles to the school's annual Secretary of the Board report, the ASBR, submitted to DESI. And so they see $21.7 million in revenues, 20.6 in expenses, and so a net change in fund balance of $1.1 million. And so as noted in August, from a cash in, cash out perspective, the amount that our bank account changed. So AL's cash increased by $800,000. And we mentioned that back in August. Just some other notes about the financial statements. So we talked about the principles of consolidation, the basis of accounting in note B. Note L we talked about, but they're in note N, the liquidity and availability of financial assets. So financial assets available to meet cash needs for general expenditures within 1 year is $6.2 million, just over 6.2. Last year it was just about $5.1 million. So if we compare the 2 years, we had $1 million increase. And the main reason for that, and we mentioned this back in August as well, the state and local revenues were better than budgeted due to higher per WADA allocation in the basic formula payment. And then also transportation was fully funded, and we also received a school safety grant. Other audit sections. So included in the audit, there's a state compliance section, as well as the federal, which we've briefly highlighted as well. Just talking about the state though. So this report on compliance with state requirements. So the auditors examined management's assertions about the school and that the school complied with the requirements of Missouri laws and regulations regarding budgetary and disbursement procedures, accurate disclosure by the school's records of pupil attendance and transportation records, and other statutory requirements as listed in the schedule of selected statistics for last year, June 30th, 2024. And so management is responsible for the school's compliance. The auditors have certain responsibilities as well, and that's to express an opinion on management's assertions about the school's compliance based on their examination. And so they believe that with their examination, it provides reasonable basis for their opinion. And so in their opinion, management's assertions that the school complied with the requirements for last year, June 30th, are fairly stated in all material respects. In the federal compliance section, so they issue a report on internal control over financial reporting. And so they've audited our financial statements. And that's what they're reporting on here on the federal side for internal control over those financial statements. And so they report and they consider the school's internal control over financial reporting, internal control, as a basis for designing audit procedures that are appropriate in the circumstances for the purpose of expressing their opinion on the financial statements. They do not express an opinion on the effectiveness of the school's internal control. Given these limitations during their audit, they did not identify any deficiencies in internal control that they consider material weakness. And again, this relates to the financial reporting. Let's see, so they're in the report on compliance and other matters. The results of their test disclose no instances of non-compliance or other matters that are required to be reported under government auditing standards. And so the purpose of the report, the purpose is solely to describe the scope of their testing and internal controls and compliance and the results of that testing, and do not provide an opinion on the effectiveness of the school's internal control or on compliance. Then they also have a report on compliance for each of the major federal programs. And that's what we were talking about a few moments ago, just about the qualified and unmodified opinions with respect to that compliance over each major program. And we've highlighted, I think, all of those items there. I just want to make sure I'm not missing anything within that report. I think I've got everything there. And we talked about the qualified and unmodified opinions on page 28. And then the finding also listed with this section here. Right. Okay, so any questions over the independent auditor's report? Okay, close to the last item, and that is fund balance and reserve ratio. And so typically, when presenting the audit, we like to also just highlight where we're at on the fund balance. And so the fund balances in funds 1 and 2, or sometimes we refer to those as funds 10 and 20. We have $6.1 million in funds 1 and 2. During the year in funds 1 and 2, we spent just about $18.6 million. And so when we compare those to come up with a reserve ratio, we're right about at 33%. And so if you kind of threw a line on the track of where we're at in fund balance as a percentage, we continue to go up and up and up. When we look at our policies and procedures, we've talked about where we want to be between 18 and 20%. So we're over where we want to be in our reserve ratio. I'm going to save that for another meeting to talk about what we want to do to get closer to about 20% in our reserve ratio. So key takeaways. So for the DESI financial statements, and that's what DESI with the ASBR, what they see there, we had an increase of $1.1 million. What the bank sees in financial statements is $1.7 million, essentially like net income. And then from a cash in, cash out perspective, if we're just looking at how our bank changed, it was an $800,000 increase. We talked about the audit findings and the corrective action. I also talked about the reserve ratio being at 33% and a fund balance of $6.1 million. Any questions about what we've unpacked here?
Okay.
All right. We'll need a motion to approve the 2023-2024 audit.
So moved.
Second.
All right. Any discussion? All in favor?
Aye.
Aye.
Aye. Any opposed? All right, motion carries.
Thank you, Stephen.
Thank you.
Yeah, that was very
Yes,
well
thank you,
explained.
Steve. Very good.
Yeah, very
Yeah,
clear.
nice job.
Yep. Thank you. Thank you all for meeting on December 30th. So appreciate that, and appreciate
Yep.
our auditors too helping us
Yeah.
get this pushed
Yeah.
through. We had to meet state deadlines to have this submitted tomorrow. So thank you very
Yes.
much.
Appreciate all of you. We have one more agenda item,
Yeah.
very short.
Oh, we do? Okay.
Yes. And that is for a reimbursement. Wait, I just want to make sure we are all done with the audit, right? And yes,
Yes, we're-
thank you.
yes,
Thank you
we're-
very much.
Can you stop your sharing? Yeah, good, thank you.
Okay. All right. And then we have one other item to reimburse Nathaniel for a fine that he has received. And the short thing is, you may want to go into more detail, Mr. Bang, but the short thing is the Missouri Ethics Commission, we talk about when they send the stuff out, send it in by the deadline, or you're going to get fined, you're going to get fined. Well, Nathaniel was a new board member, and so he wasn't in on that part. But, in short, there was an employee of the school who is no longer with the school now, but did not, basically didn't notify or report how am I say this right? Report Nathaniel as a new board member in the correct amount of time. And so even though it is the school's fault, the school can't pay this. This is a fee that they have assessed onto Nathaniel. And so what we want to recommend, of course, is that the school reimburse Nathaniel for that since it was a school error. Anything that I missed on that, Mr. Bang?
No, that's correct, because whenever there's a new board member, we need to report it within a month or so to the Missouri State Commission, and then they will start the process to make sure that the board member is filling all the paperwork and to be in compliance. Unfortunately, there was a delay in the reporting, which resulted in fines for Nathaniel.
Yeah.
How
So-
much the fine?
700 and something, I think. Let me go and check.
Yeah, 750, I believe.
750, yeah. So it's a fine that the school cannot pay. So we had a discussion with Dana and see, because it's the responsibility of the school to reimburse Nathaniel.
So, yeah, no fault of Nathaniel's. It's just the commission will not allow the money to come from the school. So can I get a motion to reimburse Nathaniel for, and I need to make sure we are saying the right amount. It is 750, right? I had 795 in my head, but I just want to make sure here.
760.
760.
There we go.
Okay, yeah, so to reimburse Nathaniel $760 for that fine.
So moved.
Okay,
Kelly, I second it.
all right. Any discussion?
You said that the school can't pay it, but we are giving the school permission to pay it? I don't
To
understand.
reimburse him.
They
He
can't
has to
pay it
it.
outright.
Oh, he had to pay it. Oh,
Yes,
Yeah.
yeah,
they
he
can't
has
pay
to.
that.
Merry Christmas, Nathaniel.
Yeah.
Oh, I gotcha. Thank you.
Yeah, so they can't pay it on his behalf, but if the board approves, we can reimburse him for that.
Okay.
And now we have procedures in place to make sure it doesn't happen again.
The procedures were in place.
Yeah, it's
they
the first
just
time
were
it
missed.
happened.
Just an oversight.
Yeah, it's the first time we have this issue. So
Yeah.
just make sure that, and we are still in the transition in that position to make sure that any new board member is reported to the commission in time. And then once they receive, because generally the commission use their personal email and the school email to notify them about it. So we make sure that they know it, and then be in the lookout for any email from the commission.
So yeah, I do. The good thing is there are procedures in place. I think it was just an oversight by an employee. All right, any other discussion? All right, all in favor?
I,
Aye.
Aye.
Any opposed? All right, motion carries. And that is it for calendar year 2024.
Happy New Year, everyone.
Happy, yes.
New Year.
Year.
Happy New Year.